Have you ever wondered what 2025 has in store for the stock market? Are we on the verge of a crash, or are we about to witness a historic boom? In today's video, I'm going to show you how to understand the forces behind the market and prepare for any scenario. With years of experience helping investors make smarter decisions, I know that knowledge is your most valuable asset. 2025 is shaping up to be a year full of uncertainties and challenges, leaving even the most experienced investors confused. On one hand, big investors like Warren Buffett are sitting on record amounts of cash, waiting for the right moment to act. On the other hand, the American economy is under pressure, high inflation, consumers with less money on hand, and struggles to cover basic expenses. This contrast creates an unpredictable scenario that could lead to either great opportunities or significant losses. For example, after years of economic stimulus and rapid post-pandemic growth, the market seems to have hit a turning point. Volatility is higher than ever, with investors eager to know if the coming months will bring historic gains or painful corrections. Add to that factors like political changes, rising interest rates, and growing public debt, and the uncertainties only multiply. The big question is, how do you navigate such a complex landscape without letting emotions take over your decisions? Now that we've defined the problem, let's dive into the solutions that can help you prepare, no matter what 2025 has in store. To figure out how to position yourself in 2025, we need a clear plan. In this video, we'll explore three crucial points. First, how we got to the current state of the market and what it teaches us. Second, what really drives the stock market and how this applies to the year ahead. And finally, practical strategies to thrive in any scenario, whether it's a crash or a boom. To understand the future, we have to look back at the path that got us here. 20 years ago, the S&P 500 was hovering around 1,000 points. Since then, we've seen incredible growth, surpassing 6,000 points, with most of this rise happening in the last 5 years. Post-pandemic, economic stimulus and aggressive monetary policies propelled the markets to new heights. But this rapid growth raises concerns. Can the market sustain this pace, or are we heading toward an inevitable correction? History shows that periods of intense growth often precede significant adjustments. Analyzing the past helps us identify patterns and better prepare our strategies for 2025. At the heart of the stock market are two basic forces, supply and demand. When there are more buyers than sellers, prices rise. When there are more sellers than buyers, prices fall. But beyond that, there are subtler dynamics at play, like optimism, cash availability, and, of course, emotions. Today, we're seeing a unique scenario. Institutional investors are sitting on record amounts of cash waiting to be deployed, while the average American is struggling with limited funds and mounting expenses. This imbalance creates volatility. Emotional behavior amplifies market swings, whether it's fear of a crash or excitement over rapid gains. Understanding these dynamics is key to navigating 2025. Inflation and interest rates are two of the most influential factors in the stock market. When inflation is high, purchasing power decreases, and investors become more cautious. To combat this, the Federal Reserve raises interest rates, making credit more expensive and slowing down consumption. In 2025, Jerome Powell has already indicated that aggressive rate cuts are unlikely, as inflation remains a challenge. This means companies reliant on cheap credit, like those in the tech sector, might face difficulties, while more stable sectors like energy and healthcare could present opportunities. With higher rates, investors need to adjust their strategies to protect their capital and identify new opportunities. U.S. national debt has reached alarming levels, surpassing $36 trillion and growing faster than the GDP. This creates significant pressure on the economy, as more resources are allocated to servicing debt instead of being invested in productive sectors. In 2025, this growing debt not only affects the domestic economy but also global confidence in U.S. markets. Rising debt could lead to cuts in government programs or tax increases, directly impacting businesses and consumers. For investors, this means keeping an eye on sectors vulnerable to tighter fiscal policies and diversifying as a form of protection. Whether 2025 brings a crash or a boom, the key to preparation is having a clear strategy. For passive investors, the AB approach, always be buying, is one of the most effective. This means consistently investing, no matter what the market is doing. Historically, this strategy works well because it takes advantage of market dips to accumulate assets at lower prices while capturing long-term growth. For active investors, preparation requires a detailed analysis of opportunities. Resilient sectors like healthcare and consumer staples tend to perform well in crises, while emerging areas like green technology might deliver surprising growth in optimistic markets. The secret is doing your homework, understand company fundamentals, evaluate balance sheets, and look for signs of sustainable growth. Diversification is also essential. Spreading your investments across different assets reduces the risk of significant losses in a single sector. And above all, avoid emotional reactions. Investing is a game of patience and discipline. Those who prepare for market ups and downs not only minimize losses but also position themselves to capitalize on new opportunities. As we look toward 2025, it's critical to remember that the stock market isn't just about numbers, it's about discipline and a long-term vision. Market fluctuations can be intimidating, but every crisis brings unique opportunities for those who are prepared. True success in investing doesn't come from predicting the future but from building a solid strategy and trusting the process. Every decision you make today is a step toward your financial future. So, the question isn't what the market will do in 2025, it's what you will do to make the most of whatever comes your way. This is your time to act and position yourself for success. If you found this information helpful, don't forget to like this video and subscribe to the channel for more content on finances and investments. Share in the comments, what's your strategy for 2025? And make sure to turn on the notification bell so you never miss an important insight that could transform your financial decisions. Your journey to success starts now. As we look ahead to 2025, one thing is certain, the stock market remains a place where preparation meets opportunity. Remember, it's not about predicting every market move, it's about building a strategy that thrives in any scenario. Crises can be intimidating, but they also create moments where great fortunes are built by those who see the opportunities. Stay disciplined, focus on the long term, and don't let short-term emotions derail your plans. The market rewards patience, not panic. And never forget, every dollar you invest today is a step closer to financial freedom. 2025 could be the year you completely transform how you approach money and investments. This is your moment to act, learn, and grow. The journey won't be perfect, but it will be yours, and that's what truly matters. Keep learning, keep investing, and most importantly, keep believing in yourself. The future belongs to those who prepare for it today, and you've already taken the first step by being here. Now, go forward and build the financial legacy you deserve.